Welcome back to your daily financial news digest, where today we have an exciting lineup of stories that could impact your portfolio and investment strategies. First, we're diving into the 2-week ceasefire between the US and Iran, a geopolitical move that has significant implications for oil prices and global supply chains, especially around the critical Strait of Hormuz. Next, we'll explore how Wawa, a convenience store chain, has cultivated a fiercely loyal customer base, often referred to as a cult-like following, and what that means for retail trends and consumer behavior. Finally, we'll analyze the current state of Bitcoin and discuss the growing dangers of complacency in financial markets, a mindset that could lead to unexpected risks for investors. Stay tuned as we unravel these pivotal stories that could shape your financial landscape. Tensions in the Middle East are reaching a critical juncture as a 2-week ceasefire between the US and Iran is now in effect. This ceasefire is particularly significant considering the Strait of Hormuz, a vital artery for global oil shipping, which has always been a flashpoint in US-Iran relations. The strait handles approximately 20% of the world's oil supply, making stability in this region crucial not just for the Middle East, but for the global economy as a whole. Recent US and Israeli airstrikes have notably degraded Iran's military capabilities, which raises questions about the Iranian Revolutionary Guard's ability to control shipping routes through this critical passage. As we navigate through this complex geopolitical landscape, both the US Secretary of War and the Chairman of the Joint Chiefs of Staff have made it clear that they are prepared to resume combat operations if the situation demands. This pause in hostilities is far from being a definitive resolution. Rather, it suggests that all military options remain on the table. The ceasefire follows a controversial statement made by President Trump, which has elicited mixed reactions from political commentators and analysts alike. Iranian state media has escalated the rhetoric by urging citizens to form human shields around critical power sites, revealing a stark disregard for the welfare of the Iranian populace. Meanwhile, reports of recent executions of alleged protesters highlight the regime's brutal tactics to suppress dissent. Given these dynamics, investors should closely monitor developments in the Strait of Hormuz, as any escalation could have significant implications for oil prices and overall market stability. Let's hear what was said.
Harris, good morning. We start with breaking news. State media reports that Iran has halted the passage of oil tankers through the Strait of Hormuz after Israeli attacks on Hezbollah in Lebanon. Earlier today,
the complexities of the situation we just heard about are indeed alarming. The ceasefire may seem like a temporary relief, but the reality is that it serves more as a tactical pause rather than a lasting solution. The US and Israel have made it clear that they view Iran's military capabilities as a direct threat, especially given the Revolutionary Guard's historical control over the Strait of Hormuz. This control not only affects shipping routes, but also has broader implications for global oil supplies. The airstrikes that targeted Iran's military infrastructure were designed to weaken its capacity to retaliate or disrupt oil shipping, a crucial factor for many economies worldwide. The fact that the US military leadership is prepared to resume operations underscores the precariousness of the situation. The rhetoric coming from both sides has escalated in tandem with military actions, creating a volatile environment that investors cannot afford to ignore. A ceasefire that is merely a pause in hostilities means that the potential for renewed conflict remains high, which could lead to spikes in oil prices. If Iran perceives this ceasefire as a moment to regroup and strengthen its military assets, the implications for oil markets could be severe. Just imagine a scenario where the Iranian Revolutionary Guard decides to engage in aggressive posturing or even military action in the Strait of Hormuz once again. This could drive oil prices skyward overnight. Additionally, the recent calls from Iranian state media for citizens to act as human shields reflect the regime's desperation and its willingness to use its populace as pawns in a larger geopolitical game. Such tactics not only highlight the regime's brutality, but also complicate any future diplomatic efforts. Investors should be wary of the ethical implications here, as companies operating in or with ties to Iran may face reputational risks, in addition to potential sanctions that could arise from renewed hostilities. The underlying societal unrest in Iran, evidenced by the executions of alleged protesters, also plays a critical role in this narrative. A regime that feels threatened both internally and externally may act more aggressively, both in terms of military actions and in suppressing dissent. This internal pressure can lead to unpredictable outcomes, which adds another layer of risk for investors. In light of these developments, it is crucial for investors to remain vigilant. The situation in the Strait of Hormuz can change rapidly, and any signs of escalation will likely trigger immediate reactions in oil markets, as well as broader financial markets. The interconnectedness of global supply chains means that any disruption in oil flow can ripple through economies far and wide. As we continue to monitor these developments, it's essential to keep an eye on both the geopolitical landscape and the specific movements in energy stocks, as they will provide critical indicators of market sentiment in response to these unfolding events. Wawa has become a household name in the Mid-Atlantic region, often lauded for its exceptional food offerings that have earned it a cult-like following. This loyal customer base is not just about convenience, it's a testament to the quality and innovation that Wawa brings to the table, quite literally. With a menu that ranges from fresh hoagies to delicious coffee, Wawa has positioned itself as more than just a convenience store, it's a destination. In an industry where many players are struggling, Wawa's remarkable success shines a light on the potential of food service in the convenience sector. As we witness the growing competition, especially with giants like 7-Eleven facing their own challenges, the landscape is shifting. 7-Eleven, as the world's largest convenience store chain, is grappling with disappointing financial results and a tarnished reputation, particularly regarding cleanliness in its stores. This is a stark contrast to Wawa's thriving brand image. The Japanese parent company, 7&i Holdings, recognizes the need for transformation and is pivoting its strategy to address these critical issues. Meanwhile, Casey's General Stores, the third largest player in this market, is thriving by effectively integrating grocery and food services, particularly in rural areas where such offerings are in high demand. As we continue to see evolving strategies in the convenience store sector, maintaining customer interest through innovative limited-time offers like Wawa's Thanksgiving-themed Gobbler is crucial. Let's hear what was said.
Twice daily in Tennessee, and Travel Center Buc-ee's in the South.
They're going to bump up against some people who've really locked down certain regions and cut their teeth and sort of made a name for themselves, innovating on their own terms. And I don't know if anyone knows how this is.
The insights shared in that clip really underscore the intensifying competition within the convenience store sector. Wawa's ability to cultivate a devoted customer following is impressive, especially when you consider that it has more than doubled its revenue over the past decade, coupled with a workforce expansion of nearly 90%. This growth trajectory is not merely a reflection of increased foot traffic, but rather a strategic commitment to enhancing customer experience and food quality. In contrast, 7-Eleven's struggles are a clear signal to investors about the risks associated with complacency in this market. The negative sentiment surrounding store cleanliness and overall customer experience can have long-lasting effects on brand loyalty. As 7&i Holdings shifts its focus towards transformation, it will be interesting to see how quickly they can turn around public perception and improve operational efficiency. If they fail to address these core issues, they may continue to lose market share to more agile competitors like Wawa and Casey's. Speaking of Casey's, their success story highlights a vital trend in the convenience store sector: the integration of grocery and food services. The emphasis on food quality and variety is becoming a significant differentiator in attracting customers, especially in underserved rural areas. By catering to the community's needs, Casey's has managed to thrive while others falter. This approach not only enhances customer loyalty, but also positions them advantageously against fast food chains that are starting to encroach on the convenience space. As the competition heats up, we can expect more convenience store chains to enhance their food offerings and overall quality. Wawa's limited-time offers, like the Gobbler, are a brilliant tactic to keep customers returning and engaged. These promotions foster a sense of urgency and excitement, encouraging customers to visit frequently. It's a strategy that not only boosts sales, but also reinforces Wawa's brand identity as a leader in innovative food service. For investors, the evolving landscape of convenience stores calls for a keen eye on these trends. Companies that prioritize food service quality and customer experience are likely to outperform their competitors in the long run. Wawa and Casey's are setting a high bar, and their strategies could serve as a roadmap for other chains looking to revitalize their offerings. Monitoring these developments will be crucial as we look ahead to see which players will emerge as leaders in this competitive environment. In summary, the convenience store market is at a pivotal moment, and the actions taken by chains like Wawa and 7-Eleven will shape the future landscape. Maintaining focus on customer experience and food quality will be the key differentiators that investors should watch closely in the coming months. As we dive into today's financial landscape, we can't ignore the discussions surrounding Bitcoin and the pervasive dangers of complacency in our markets. Recently, financial analysts have raised alarms about the mindset many investors are adopting, believing that the stability we've enjoyed is here to stay. This sense of security, while comforting, can lead to significant oversights when it comes to assessing risks. The buy-the-dip mentality, which has often rewarded investors during bull markets, is now facing a stern test, particularly as we navigate the complexities of a bear market where such strategies may falter dramatically. Current economic indicators paint a mixed picture, with persistent inflation, labor market challenges, and geopolitical tensions adding layers of uncertainty that many seem to be ignoring. To make matters worse, we're witnessing a spike in oil prices, a historical harbinger of business cycle downturns. This isn't just a blip on the radar. It suggests that the conditions we're experiencing are part of a larger cycle that could potentially signal the end of the current economic expansion. Compounding these issues are the high market valuations and an unusual lack of volatility, both of which are classic signs of complacency. Investors are mistakenly led to believe that financial stability will persist indefinitely. Meanwhile, Bitcoin is navigating its own turbulent waters, having entered a bear market phase in the fourth quarter of the post-halving year. As we eagerly await the latest insights, let's hear what was said.
And it's Bitcoin that's bleeding out first, right? Altcoins bleed, Bitcoin bleeds, stocks bleed, metals bleed, rolling down the risk curve. And this is why complacency is dangerous. Just because
What we just heard underscores the critical need for vigilance in our investment strategies, particularly in the realm of Bitcoin. The warning about complacency is especially pertinent, as it highlights how easily investors can fall into the trap of assuming that favorable market conditions will continue unchallenged. Just look at Bitcoin's trajectory. After its recent bear market entry in the fourth quarter of 2025, it fell below the crucial 21-week exponential moving average, a significant technical indicator that many traders watch closely. This movement is not just a number. It represents a shift in market sentiment that investors need to take seriously. The counter-trend rally we saw from November to mid-January might have seemed promising at first glance, but it ultimately faced rejection at the bear market resistance band, currently hovering around 79,000. This resistance level is critical for traders to monitor, as it serves as a psychological barrier. Should Bitcoin continue to struggle against this level, we could see further declines, reinforcing the notion that complacency in our assessments can lead to a harsh reality check. The discussion about inflation is another crucial point raised. Inflation rates have been notoriously stubborn, and while some sectors show signs of cooling, the labor market remains tight. This tightness could lead to wage inflation, further complicating the picture for the Federal Reserve and other central banks. If inflation persists or accelerates, it could prompt more aggressive monetary policy responses, which historically tend to dampen risk appetite across the board. For Bitcoin investors, this means that rising interest rates could put downward pressure on the cryptocurrency as investors seek stability in traditional assets. Moreover, geopolitical uncertainties, from tensions in Eastern Europe to trade disputes in Asia, are also looming large. These factors are often underappreciated in their impact on market dynamics, yet they can cause rapid shifts in investor sentiment, leading to volatility that could catch complacent investors off guard. Keeping an eye on these developments is essential for anyone holding Bitcoin or other risk assets. As we consider the implications of these market conditions, one key takeaway emerges: the landscape of investing is not static. The complacency we've seen in recent months could very well serve as a precursor to a more significant market correction. Investors should remain alert, actively monitoring Bitcoin's performance relative to its bear market resistance band, while also keeping an eye on macroeconomic indicators like inflation and labor market trends. In conclusion, while it might be tempting to view the current market conditions as signs of strength, we must remind ourselves that complacency can often lead to unexpected downturns. The financial markets are complex and interconnected, and ignoring potential risks could result in missed opportunities or, worse, significant losses. For Bitcoin investors, the coming weeks will be pivotal as we navigate through this uncertain environment. Staying informed and prepared could very well be the keys to weathering the storms ahead. Today, we delve into the intricate weave of global events and their implications on financial markets, focusing on three pivotal stories that intersect in ways that may not be immediately apparent. The ongoing ceasefire between the US and Iran, the cult-like following of Huawei, and the cautionary tale surrounding Bitcoin all reflect broader market trends and investor sentiment. As we analyze these narratives, we will uncover the underlying currents that could shape financial decisions in the near future. First, let's unpack the significant geopolitical development of a 2-week ceasefire between the US and Iran. This truce is particularly consequential as it pertains to the Strait of Hormuz, a critical maritime choke point through which approximately 20% of the world's oil supply is transported. The recent tensions in this region have been a source of volatility for oil prices, which have fluctuated based on geopolitical news cycles. With this ceasefire now in effect, investors might expect some stabilization in oil markets, at least temporarily. A reduction in hostilities could lead to a more predictable supply chain for oil, potentially easing price pressures that have burdened consumers and businesses alike. However, it's essential to consider the broader implications of this ceasefire. While a temporary pause in hostilities may provide immediate relief, the underlying tensions between the US and Iran remain unresolved. Investors should be wary of complacency. A renewed escalation could quickly undo any gains made in the oil sector. Furthermore, the ripple effects of this ceasefire extend beyond oil. A stable Strait of Hormuz could lead to greater confidence in global markets, particularly in emerging markets that are heavily reliant on oil exports. However, should tensions flare again, we might see a spike in volatility, not just in oil, but across commodities and equities that are sensitive to energy prices. Next, let's shift our focus to Huawei, a convenience store chain that has cultivated an intensely loyal customer base. Often described as having a cult-like following, Huawei's success is attributed to its unique blend of quality food offerings and a personalized shopping experience. This story is less about the product itself and more about consumer behavior and brand loyalty in today's market. Huawei's ability to create a community around its brand showcases a significant trend in consumer spending: the desire for experiences and connection over mere transactions. For investors, this represents a vital lesson in brand management and customer engagement. Companies that can foster a strong emotional connection with their consumers are better positioned to weather economic downturns. Huawei's model emphasizes the importance of understanding customer demographics and preferences, particularly in a post-pandemic landscape where consumers are more selective about where they spend their money. As we look ahead, the implications for retail and food service sectors are profound. Brands that can replicate Huawei's success in cultivating loyalty may enjoy sustained revenue growth, even in challenging economic climates. However, the dynamics of consumer loyalty can shift rapidly in response to broader economic factors. Rising inflation and changing consumer spending habits could challenge even the most loyal customer bases. Therefore, investors should keep an eye on how companies adapt their strategies in response to these shifts. Are they innovating their product lines? Are they enhancing customer experience through technology? These are questions that will matter greatly in the coming months. Now, let's connect these narratives with the ongoing discussions around Bitcoin and the overarching theme of complacency in financial markets. The cryptocurrency market has been marked by dramatic swings, and the allure of quick profits can often lead investors to overlook the inherent risks. Complacency, particularly in the context of Bitcoin, refers to the tendency of investors to ignore warning signs, becoming overly confident in the asset's trajectory without fully considering the volatility that characterizes it. As regulatory scrutiny around cryptocurrencies grows, particularly in the context of market manipulation and fraud, complacency could prove dangerous. Investors should be acutely aware of the potential for significant price corrections, especially if macroeconomic conditions change or if broader investment sentiment turns sour. The interaction between traditional markets and cryptocurrencies is increasingly complex, and as we've seen with the rise and fall of Bitcoin, market sentiment can shift rapidly. In conclusion, the interplay between geopolitical developments, consumer behavior, and financial market dynamics creates a rich tapestry of opportunities and risks. The ceasefire between the US and Iran may offer a temporary respite for oil markets, but underlying tensions could reignite volatility. Huawei's brand loyalty exemplifies the power of consumer connection, but investors must remain vigilant against changing economic conditions. Meanwhile, the cryptocurrency market serves as a stark reminder of the dangers of complacency. As we move forward, I encourage you to keep a close watch on these interconnected narratives, as they will undoubtedly shape the financial landscape in the months to come. Each of these stories holds lessons that could influence investment strategies, urging us all to look beyond the headlines and consider the broader implications at play. Thank you for tuning in, and stay informed as we continue to navigate these complex financial waters together. As we wrap up today's analysis, I invite you to join the conversation by liking this video and subscribing to our channel. Your engagement not only helps us reach more viewers, but also strengthens our community of informed investors. I genuinely want to hear your thoughts on today's market movements. Do you find the current trends concerning, or are you seeing opportunities? Drop your comments below and let's discuss. As we look ahead, tomorrow's headlines promise to be just as compelling, with crucial earnings reports on the docket and key economic indicators set to be released. I'll be breaking down how these developments could impact your investment strategy, especially in light of today's volatility. So make sure to tune in, you won't want to miss it. Thank you for joining me today, and let's continue navigating these financial waters together. Your financial future is worth every minute of our time.